Subscribe to the channel and press the bell icon to never miss any updates. Hello everyone, we have Carter Kilmann on the show, and he is a personal finance content writer, stock analyst, and also uh, obviously an investor. So welcome to the show, Carter, and uh, tell me if I miss anything.
Oh, no, you got it all. That pretty much describes me in a nutshell. That's me.
All right. So you said that you write. No, actually, I saw a bunch of things on your LinkedIn profile that you write regarding personal finance and all that stuff. And the content that you write on a daily basis is really helpful for people who are just getting started with personal finance and investing and all that stuff. So basically, when did you decide that you should go ahead with financial content writing? You decided the niche that you will only focus on finance.
Yeah, no, that's a good question. I've been freelance writing since July 2019, but before that, I was working in corporate banking, corporate investment banking,
Okay.
and obviously that wasn't personal finance related, but there's crossover. So I got to learn more about analyzing companies and kind of, I guess, just being finance minded, and that helped kind of spur me to think like, hey, like personal finance is important. Finance as a whole is a subject that I think is grossly under emphasized in school.
Right.
Um, so that just led me to think like, hey, once I made my transition from corporate banking to freelancing, what's a good niche for me to target? And since I had the background in corporate finance, it made the
Mm.
transition easier to focus on personal finance content. And it was crazy towards the end of my time in corporate banking. I would hear things from even coworkers who were in good jobs in banking, and they'd say
Mm.
things like, "Oh, I don't even own a credit card," or like, "Oh, I haven't budgeted in months or years or never. Like I don't even know if how much I make each month," and that just
Right.
like blew my mind. So that was a big key moment of, hey, like personal finance is a topic that is I can target this and help people.
All right. So you must have met a lot of people who makes like thousands of dollars every month, but still
Hmm.
they don't have money management. Like they are spending more money than they earn. You must have
Exactly.
observed a lot of people like this.
Yeah, no, 100%. And that's the thing, like they wouldn't even necessarily know that they were doing it. I mean, lifestyle creep is real. It catches up with you. You don't you start thinking this, oh, I can afford it mindset, but you apply that to everything. Eventually, you can't afford it. Like, but you wouldn't know any different.
It's like a dominoes effect. It will hurt you in the long run.
Yeah, for sure.
So if we go ahead with the podcast, first of all, I want to start with the stock market crash.
Of course.
Because we are in a bull run and the markets all across the world is all time high. And if I talk about India, in the last 1.5 years, the Indian stock market has delivered the highest return on investment in the world. So you
Wow.
can imagine how massive the Indian stock market is going. And if we compare it with March 23, 2020, when the stock market was at the bottom,
Yeah.
from it was like 26,000. We have the index Sensex, just like you have Dow Jones, right?
Hmm.
So it was 26,000 and right now it is at nearly 60,000. So you can see that there is a massive jump in just 28 months of 20, near less than 24 months, I should say.
Yeah, that's
So what do you
incredible.
think? What's the situation in the United States, and how can we do investment during this kind of situation?
Well, I think every market is unique, but I think a lot of them are seeing the same things where there's just this feverish like demand to find value somewhere, and the meme stock, and I'm sure uh, your stock market saw some of this too, but like the
Right.
meme stock rallies of just people that had never traded before pouring money into these companies that may or may not really deserve that much capital flowing into them. But in terms of handling it, I'm a believer in long-term investing strategies, trying to find
Right.
a company that is posed to exist in its industry for the long run, not only exist, but be in the top tier. And I think that still applies, even when you have maybe a market of valuations that are exceedingly high in some cases. I think there's still value to be had in certain places. And uh, in terms of a crash itself, like, I guess it depends what your definition of a crash is. But I don't know. I don't really see a full-blown crash in the next couple of years. Maybe, I mean, corrections are normal. I could see that more likely. But
Short-term corrections will be there, right?
yeah,
And it has
yeah,
to be. It helps us for as like people like us, long-term investors, to make more money to invest during this kind
yeah,
of situation.
yeah, exactly. Yeah, yeah.
And
You
if we,
gotta.
sorry.
No, go. No, go ahead. Go ahead.
Yeah, and if we talk about the geopolitical situation, it's not like it's not looking good, to be honest. Like
Mhm.
there are many problems are there. We have issue of Indo-Pacific area, China issue, and then we have Afghanistan issue, and a lot of issues are there regarding geopolitics, and we never know any terror attack or any major climate change issue occur, and the major stock market can crash. We never know.
Mhm.
But if we, as you just said, that you and me also, we are a long-term investors, so we believe in investing in fundamentally sound companies, and our focus remains on like the revenue that is generated by these companies. If these companies are keep generating revenues, we have no problem with that. But if the business model is failing continuously for 2 to 3 years, then we should be careful before investing in this kind of companies.
Yeah, for sure. And that's one of those things that the can get, I think, like clouded in judgment, is these companies that might be struggling and then all of a sudden money's pouring in. Like I think BlackBerry's one. I haven't looked like super in depth at their financials recently, but I think their revenue has dropped pretty significantly over the last like couple of years. But obviously they were a meme stock, like people money poured into it. Or you look at AMC or GameStop, like those
Right.
companies were kind of at like a turning point in their business models of like, well, I guess they could maybe switch for the better, but like they were definitely going downhill, and then yet all this money comes in. And I know that was a cultural movement against like Wall Street and stuff, but yeah, I mean that really exposes that, like what you mentioned, the fundamentals of companies that are kind of deteriorating.
But what do you think about it? Like in meme, as you just said, that in meme stocks, people are like sometimes they it's just pump and dump strategy, and
Mhm.
almost thousands of people lose money by trading in this kind of situation because they have no idea what is going on behind the actual stock. So what do you think that the Security and Exchange Board should regulate this kind of activity, or how is possible that it's so easy to make a group in Reddit and influence people to buy this stock and sell this stock?
Yeah, and that's the tricky thing. I don't think the SEC will do really anything about it, because I mean, bureaucracy and regulation is so slow to move on anything in the first place. But at the end, I mean, maybe they somehow crack down on like grouping people together and pumping them with information that might be false. But that across a whole, like all of Reddit and all the millions of threads, that's gonna be, I don't know. In my opinion, that's gonna be hard for them to crack down on. Um, but yeah, like you said, it's super easy for people to influence people that way. I'm just hoping maybe like as more people are investing, I don't know, for the even if they're not looking behind these companies, it's sort of like, well, if they get fooled once, hopefully the second time, like they realize, okay, these people are just pump and dump things. Like
Right.
hopefully the average person gets smarter and can spot like, okay, this company, someone's just pumping this for no reason. Like there's no justification for buying this. But other than that, you just hope people are smarter with their money.
Even I should say Elon Musk is doing the same thing with crypto, and I think he tried with GameStop too.
Yeah, it was he like I can't remember the tweet, but he tweeted about like, oh,
Right.
like buy it, and
I,
then like
I I
he
also don't remember, but I just observe. I have just observed. I heard. I had. I observed that this kind of situation had occurred when the scenario was like everyone was optimistic towards GameStop without having no fundamental. The company was
Right.
about to shut down, and the stock just skyrocketed 1,000%, 2,000%, like that.
Yeah, that was crazy. And yeah, like you said, like people like Elon Musk can influence people so much. And then I don't know if you've heard of, I mean, not nearly on the same level because she owns funds, but Kathy Wood with ARK Invest, like
No, I have
that's
no
like,
idea about it.
so she's worth looking into. She's become like a big influencer in like the investing space, at least in the US market. But now I think a lot of the meme traders and like Redditors and stuff, and not to take anything away from her because she's had good returns with her portfolios. But if she does something, a lot of people follow. Like Robinhood, she invested the day after they went public,
Okay.
and the next Monday or Tuesday, I want to say, it jumped from like in the 30s to 85
My
at
God.
most. I know, and and I'm pretty sure it's just because it came out that she had invested in them. Nothing changed, obviously, in that 5-day period fundamentally. If
Right.
anything, Robin has had some concerning, shady stuff going on behind the scenes. But yeah, it's crazy how much influence certain people with social media have these days.
Right. And I've heard a lot about Dave Ramsey. What do you think about him? Have you heard about him or?
Heard of him? I don't know. I haven't like read any of his books or anything, or taken his lectures, or I think I want to say that one of his principles is buying everything in cash or whatever. I'm not really sure. I mean, if he's helping people save money, I'm sure some of his stuff is a little extreme. I feel like I've heard kind of mixed reviews, but I mean, if he's helping people understand personal finance and be smarter with their money, so be it. Like that's good in my book.
Yeah.
The other stuff, I don't know. I don't have enough information on, but I'm
Right.
all about personal finance.
Okay. So the next thing that I would like to ask you is that what do you think that mutual fund is good, or investing in direct stocks is good option for beginners? What do you think about it?
For beginners, I think, in my opinion, and not even necessarily just beginners, but people that aren't willing to, either don't have the willingness to dive into, because as you know, assessing an upfront research of a mutual fund is very different from a stock.
Right.
Diving into an individual company takes a long time.
Right.
Someone doesn't have the willingness, time, or know-how to dive into a stock and accumulate a portfolio of stocks. I think a mutual fund makes way more sense. It's a lot easier to research up front, compare it to like peers. There's tons of very easy to understand information about mutual funds out there. So I'm a believer in mutual funds for someone who's not willing to really dive deep into stocks.
Right. All right. But if you talk about like just saying my thoughts, that I know that US tech companies will dominate the world and is dominating the world. Like there are plenty of companies: Google, Microsoft, Apple, Facebook. We have Tesla is slightly slowly and steadily growing. We have Zoom, in which we are communicating right now, and there are Netflix. There are many companies in which if we manage to invest, we can double our money faster. Uh, Faster, because this is global company. Like if any company is selling a physical products, it would be difficult to reach out. But if we talk about tech companies, and especially of the United States, that they have funds, they have the exposure to expand the business, and that is why, for according to me, if we manage to invest in a mutual fund which is only specific to technology specific companies of the United States, we can beat the S&P 500 very easily, according to me. What do you think about it?
Yeah, I agree. I mean, I actually had an article recently that I wrote that compared some of the more, not mutual funds, but ETFs, so pretty
Right.
much a similar boat. And it was like S&P 500 and I'm trying to remember, equal weighted and market weighted, as well as the QQQ Invesco, which tracks like the NASDAQ 100. And if you invested in like the NASDAQ 100 like index, the QQQ, your return, I want to say it was like 3 or 4 times as high as like the S&P,
Oh
like
my
just over
God.
the last 12 years or whatever. Now, obviously, like there's some storyline to that. Like if you bought tech companies in 2008,
Right.
that's a good time to buy it, because then the last 13 or so years has been very tech focused. Will that repeat going forward? You'd like to think so. I mean, like
Yeah, we
tech
never
companies,
know.
yeah, you never know. But tech companies aren't going anywhere. Like you said, like if you kind of invest heavily in something that focuses on tech companies, you should be in pretty good shape if we remain a tech focused world.
Right.
But yeah, I agree. It makes sense to sometimes get more targeted with a mutual fund on like companies that you believe in. So maybe there is still some stock analysis up front to understand what companies are behind that mutual fund.
So I still remember the period when I was in like second year of my college graduation, and it was like 2018, and
Hmm.
I was going through some of the listed companies of the US tech companies, and I found Snapchat at $4, and I
Well,
still regret that I I regret that I didn't invest that particular time, because right now it is nearly $76.
mm, yeah, but we all have those, right? You
Yeah.
could look you could look at Amazon, like, or you could look at Netflix and all that. And
Yes.
I remember telling my dad back when I was either a year out of college and maybe my last year of college, I was like, look, you're the one that's accumulated money and you've been working for decades. Like, I don't have anything. I was like, you need to invest in Amazon. I want to say it was like, I don't know, $500 to $700 a share. I was like, just buy some amount of Amazon. And he was just like kind of hesitant about it. He never did it. Of course, now it's like, I don't know, 3,000 something dollars a share.
Yeah.
Yeah, I think Amazon's going to run the world one day, but that's a different story.
Exactly. Exactly. Amazon, it's like one of the article was recently published in Indian magazine that Amazon may control most of the India's retail business. Like it's like the way the company is expanding is really unbelievable. It's not profitable because India is hard to crack. It's hard to make profit in India. You can generate revenue by offering discounts and all such things because India is price sensitive market, but it's hard to make profit. But Amazon is uh, keep spending money on marketing offers and all such things because the company has huge funds. What's the problem? Let's
Yeah.
spend money and gather, and let's focus on consumer behavior. Let's gather a lot of customers, and then we will go ahead, we will monetize, and we will make millions of dollars from India. It's that simple for Amazon to spend 10-15 years, and here you go, you have already disrupted the market.
Yeah, exactly. Does Amazon have like a competitor in India?
Yes, Amazon have it's a big competitor, Flipkart, which is owned by Walmart.
Okay,
So
gotcha.
Walmart owns 75% share of Flipkart, but Amazon is doing at next level. Flipkart cannot match at that point.
No, I mean Amazon's cash flows are just absurd.
Yeah, it's like massive.
Yeah, yeah.
So next thing that I'm going to talk about is stock analysis.
Mhm.
Let's say if any individual who have no idea about stock market and all that stuff, he wants to do stock analysis, what should be the first step?
I think I think for any individual, like you need to kind of figure out how you learn best. So whether that's YouTube videos or reading articles or books or whatever, and then kind of taking it from there. So like if you're gonna fall asleep if you read an investment book, YouTube actually has a ton of great resources. That's not how I learned, so I can't necessarily pinpoint one. But you can very easily search a question like how to research stocks, and it'll be there.
Hmm.
If you're like more of a reader, like you need to be able to see it sort of thing, like the written word. Uh, I think, and this is how I learned, I would just read Barron's articles, the Wall Street Journal, read Seeking Alpha reports, just see how people talk about it, how it works in context, how people analyze companies and speak about them. And it just sort of like builds builds the circumstance around understanding it. And then at that point, I think you can read investment books like I read The Intelligent Investor.
Right.
I can't think of quite a couple of the other ones I've read, but you can find a ton of really good ones with very good ratings, and they'll give you a pretty in-depth look at things. And then from that point, I think you can graduate to reading through company press releases and 10Ks, TQs, public filings. But it's really, I think the first step is, how am I going to learn best? And I think that kind of works for learning anything. And just take it one step at a time. And each sort of lesson, it takes a while, but it's one of those things you build familiarity with over time with exposure.
All right. Another thing is that, like before doing stock analysis, is there anything that we should do about industry analysis? Like if any particular industry is about to die, let's say in the next 10 to 15 years, if we talk about petroleum industry, there are possibilities that because of the electric vehicles, the industry may die, and only aviation industry will be consuming petroleum vehicles, and all other industry will focus on electric vehicles. So is there anything that we should focus, or we should just pick stocks and do stock analysis?
Oh, no, I think the macroeconomic effects play a huge role. I mean, you could have a good company, but it could disappear in a second, like if the industry is moving elsewhere. And that's a perfect example, like you said. Like you can have an oil company or something that's doing well, like profitability wise, but they could cease to exist if all of a sudden everything switches to electric. But I think the premise is the same for reading, like from reputable companies, kind of like Barron. I can't recommend Barron's enough. I've been reading their stuff for, I don't know, since 2012 or something. Like, just that's my go-to place for getting macroeconomic news and individual stock news, and that's a good way to track kind of what's going on in certain industries. And you can just Google like industry whatever stock news and stuff like
Right.
that, and there'll be some sort of opinion piece out there. But no, I 100% think people need to track that stuff too, because just because a company is strong fundamentally does not mean the industry is there.
Exactly. That's what I believe, and that's what I check before investing in any company. As I just said, that I would not prefer to invest in petroleum company right now, because uh, as a long term investor, I am willing to stay invested for 15-20 years, and I don't believe that in the next 15-20 years these companies will be doing extremely well compared to their potential.
Mm-hmm.
Right. So this is what I believe. And if we talk about, like, as you just mentioned about the intelligent investor, it's like we call it like the Bible of investing.
Yeah.
Like everyone should read intelligent investor book at once before starting their investment journey. And what do you think about it? What investment lessons that uh, you learn from that particular book?
Oh man, it's been like, oof, like 11 or 12 years since I've read it. Uh, from what I remember, it really just kind of exposes it. It's very comprehensive. If you open that book, you look at this thing, it's
Very
like,
comprehensive, and
this thing is so,
most of people who have just getting started to finance, it's just like bounce totally. They will not manage to understand a single thing about investment, because it's very deep. And as you just keep reading, you will feel like it's a very heavy book. It's not for
yeah.
us, it's for the professionals who are in the investment industry. But still, there are, like it is being said, chapter number 8 and chapter number 27 are the best. If you manage to understand it, you are good to go with your investment journey.
Wow, power to you for knowing the chapters off the top of your head. That's awesome. But no, like, yeah, it's definitely not like it'll scare people away if that's your first exposure to investing. Just because like you said, it's so thick. It covers everything comprehensively.
Right.
But it is a good resource once you kind of have a feel for it, of what investing is, and you're serious about it, and that's a great resource.
And for me, I believe that the most important thing I learned from that book is focus on index investing. You don't need to do a lot research. If you have no time, if you have Like if you are busy in your personal life, professional life, just focus on index investing. If you invest in top companies of your country, you are good to go. You will get uh, outstanding return in the long run.
Hmm.
That's
Have
what
you ever
the
heard of there's a book called Level 3 Investing? You heard of that?
who is the author?
Let me Google it. Level. It's a very easy to understand book.
Let me
Uh,
just note the name of that book.
James Clunan,
Level 3 investing. Okay. James?
Investing at Level 3. Sorry, I
Investing
flipped it.
level 3. Okay, okay, no issues.
Yeah, but no, it's a very he breaks it down very simply, just like especially for someone who's sort of on the fence of whether they want to be an active investor versus
Mhm.
just invest indexes and be passive. And hey, it's the same kind of premise of like if you understand this chapter versus this chapter, like you'll be good to
Right.
go. It's if you're a passive investor, just read these couple chapters, you're good to go. Invest in this, and you're fine. But if you want to dig deeper, he goes into that as well. He's just obviously one. It's just one person's approach to it, but if you need, that's an easier kind of like introduction to investing.
All right. And what are your thoughts that you have you do you follow Robert Kiyosaki? So that then I should uh, ask you the next question regarding him.
Robert who?
Robert Kiyosaki, the author of Rich Dad Poor Dad.
Oh yeah, I've read that book. That was I think my first I guess like personal finance book. I wouldn't even necessarily label it that, but just like money book and kind of like life book.
Right.
I want to say I was 13 to 15 years old or so.
Oh, that's
Uh,
interesting.
yeah, but I haven't really followed too much of him since then. I've seen a couple of his like YouTube videos, but I haven't followed him in a while. I don't know what he's doing these days.
No, I if you see recent videos and recent articles and all that stuff of Robert Kiyosaki, you will find that he is extremely anti-US economy.
Mm-mm.
He never liked to invest in US stocks and all such things. He always he always has pessimistic approach towards US economy. He says that the Fed is doing the wrong thing. US economy will collapse, and the gold and silver price will increase and Bitcoin price will increase. So stop buying stocks and all such things and focus on physical assets. This is
Mm-hmm.
his approach, and I don't know
Yeah.
why, but I hate him.
Yeah, I remember him being a big real estate guy, which I mean, like, hey, you can't fault people for having their own approaches to wealth generation. And he's certainly done well with investing in real estate, and I think having that work for him. But yeah, that's interesting to hear he hates the U.S. economy. I don't quite remember him being so anti stocks, but yeah, to each their own, I guess.
No, actually, you will have people like Warren Buffett, Charlie Munger, who have made billions
Yeah.
by just investing in good companies. And Charlie Munger used to say, I invested more than 40 years in just index funds. I had no idea about investing in direct stocks back then. So, if he is that much richer by investing just in index investing, how can he say, like, forget stock market, it's all collapse, all everything will collapse and all such things? Extremely pessimistic.
Yeah. Yeah. Some people just have, I guess, a contrarian view of things, and you can't really change their ways. But no, like I agree with like the Warren Buffetts of the world. Like you pick good companies, you have a long-term perspective, and I think we both kind of follow that mentality. It can pay dividends, and it doesn't take anything crazy. It's just like regular contributions, monitoring your portfolio every now and then,
Right.
and that passive approach can pay off handsomely down the road.
And for you, what do you prefer the most, like growth stocks or dividend stocks?
I don't own any dividend stocks at the moment. I'm just focused on growth, but
All right.
I started, and I was the same way as the guy you just mentioned. I'm blank on his name, but I invested in index funds and ETFs at first for a while too. That was kind of my leeway into
All right.
or my segue, I mean, into investing. And it's only kind of more over the last 5 years or so where I've learned more about investing and kind of how to pinpoint individual stocks and stuff like
Mm-hmm.
that, that I've really started to dig more into it. But I think that gets lost on a lot of people, as if like you have to invest in stocks right away. And you can invest in ETFs and kind of like, hey, I'm now in the market. Now let's learn
Exactly.
now let's learn how to actually analyze things, instead of like, I'm just going to throw money at GameStop. Like, is that really
No,
investing?
it's speculation. It's not investing.
Yeah, exactly. It's akin to gambling more so than anything.
Yeah. What do you think about asset allocation? Do you have more portion in conservative side, like there is less risk? Like equity is risky asset. Stock market is not uh, like if you need emergency money the next day, you can simply do not withdraw because there are chances of recession. There are chances that the uh, the asset class that or the mutual fund or stock in which you have invested is in negative. You are losing money. If you sell at the moment, you may lose money. So what do you think about where do you prefer to invest for conservative investment, like debt funds uh, or any other investment stream?
Yeah, I think as the 5 year mark has kind of always been in my head, is like once you hit 5 years from whatever your investment goal is, whether you're buying a house or you need the funds then for a down payment or whatever, it's the 5 year mark is kind of when you need to start shifting out of riskier things, whether that be stocks or
Hmm.
I guess crypto if that's part of your portfolio, and more so into bonds. And it's not like you don't
Hmm.
have to like learn the wonderful world of bonds and look up how to find like the specific corporate bond or whatever, municipal bond or whatever. There are ETFs for that too. So you can technically like buy a stock in a way that mirrors or mirrors a bond. So I think that's easier than ever to switch into. But yeah, as I said, like once you kind of hit that 5 year mark from whatever your goal is, and you start switching more into bonds and just try to
Hmm.
secure a little bit of a return for your money. But at that point, like assuming you've been preparing for this investment goal for a while, so take your returns, like make the money, like have your money for when you need it rather than like risk it anymore. You know what I mean?
Yes, yes, I got it. And that's the thing where that's the core thing that I would like to ask you. The next question is regarding financial planning, and this is what the proper financial planning is done. If you let's say if you have 10,000 after 5 years and you are only investing 300 $400 a month for 5 years, and if you manage to reach at that benchmark, you should start shifting your funds slowly and steadily to corporate bonds. That this is what all about financial planning. You need to plan before investing.
Yeah, for sure. No, that's I think a mistake a lot of people make, is they just start investing without a plan. And that's, again, that's more akin to gambling than anything else. Like, because what if you kind of hit whatever you might have in your head of like, oh, this stock's gonna hit it well. Like, okay, what are you gonna do with that money now? Like, are you just gonna keep it there?
Exactly.
Are you gonna sell? Like, do you know like the tax repercussions of that? But yeah, it's going into investing is not, it's not like a category that exists alone by itself. It's a subcategory of financial planning, like you said. Like investing
Exactly.
isn't just like a side hobby kind of thing. It's I mean, I guess for if you're wealthy enough, sure. But if you're investing to like make money, it's a part of financial planning. There has to be some, you have to marry it to your life somehow. And like you said, that's going into it with a plan ahead of time.
Exactly. And most people make mistakes when for short-term investors, like when, for instance, they invested $1,000 and they managed to double their money in 3 years. Let's say after 3 years they have $2,000 and they prefer to uh, sell that particular stock, and now they have no idea where to spend, and they end up spending in miscellaneous stuff. That's
Yeah.
where the problem occurs.
Yeah, exactly. That's like, and I bet a lot of people are running into that right now. Is the people that profited from like whatever meme stock rally they had, or just started investing with no idea of what they were doing. Whoever has that short-term success, and that's like one of the common behavioral biases of investing. It's like, oh, all of a sudden I'm super confident in my ability. I must know what I'm doing. And so you pick more stocks, and they're not guaranteed to work out. And that's how you could go back down to below what your initial investment is.
Right.
So yeah, investing definitely is, I think it all goes back to like what you said, like going in with some sort of plan ahead of time.
Hmm. And what do you, our final topic is about crypto, and what do you think about it? Like, should we consider investing? How much portion should we consider? And it's like, should we stay away? It's like gambling and also things.
It's funny because we talked about there's always that hindsight 2020 thing. Um, but I've dabbled some in crypto investing. I bought Ethereum back in like 2017 or something. I don't even remember what the year was anymore, but it was around when it was like $150 a coin or whatever.
Oh my
And
God.
I know.
If you have invested like 10,000, $15,000, you must have a lot of money.
Yeah, except. So I bought like, I want to say it was about 7 coins or so nothing crazy. And I held it for like 6 months or so, and it had done well in that amount of time. I think it got close to like 1,000 or maybe even surpassed it. And I
And you
always
sold it?
so I always joke with my girlfriend like that she was the reason I sold it. But she's risk averse, so
All
she's
right.
like, "Ah, I'm uncomfortable that you own that, like that's that sort of thing."
All right. All
And
right.
so I was like, all right, fine. She had said it enough where I sold it. The next day, Peter Thiel invested in Ethereum, like some
Oh
sizable
my
portion.
God.
The next day, less than 24 hours, and it went up like another 20-30%. So had I just waited one more day, and then of course, but you can always play that game. What if I held it right now? I mean, it would be even more. So story aside, I've dabbled in it some. I own a little bit now, but I don't. It'll never be like my. I prefer stocks. You
Right.
can evaluate them. They have public filings. There's more like regulation around them, which you could say, I guess, the
Hmm.
centralized nature is a bad thing from that perspective. But I like it for having the information that's standardized, and you can evaluate a company
All
versus a
right.
coin. More so, you're evaluating an idea,
Hmm.
which you can kind of do. You can say, hey, this coin solves this problem. I think that works. You can
Hmm.
kind of look at other factors like its momentum, maybe its growth.
Hmm.
But otherwise, what are you valuing? Like what says Bitcoin's worth 50,000 versus 10,000? It's
Exactly.
really it's what one person wants to pay for it more than another person. Uh, so for me, like it's 5 to 10% of a portfolio, maybe if you want to speculate on something.
Hmm. Hmm,
But
hmm.
beyond that, I think it's too risky for my taste.
So more than 5 to 10% is not advisable, according to you.
I mean, I guess it depends on who. Like, it depends on who you are. Like
Right.
I know plenty of people that invest way more in crypto. Like that's the primary way they invest. They don't even touch stocks. So like, and it can pay off.
Which is also a big problem.
It can be, and like I'm sure it works for some people. It can backfire just as easily. And I really think it depends on your financial situation. Like if
Yes.
you're young and you're gonna make plenty of income in the future to maybe offset, like it's one thing to be 50 years old and investing like half of your savings in crypto versus if you're 25, half of your savings now is not nearly as much as it then in the future.
Yes. Got it.
Uh, so I really think it depends on who you are and how. Still, you still have to be willing to dive into that crypto, in my opinion, and understand it,
Hmm.
which is harder to do because it is more abstract. But same concept applies. Try to understand what you're buying.
Do you believe it is overvalued at the moment?
I guess it depends on which one you're talking about specifically, but it's you. I think you can make, as frustrating as it is, I think you can make a case that it's undervalued and overvalued, like from either side. Like
Right.
if crypto truly is going to have like very widespread application in the future, which it potentially could, and I think like certain markets, like Ethereum is, I think you need Ethereum to buy NFTs, which has clearly
Right.
grown in popularity over the last year. So that has like real world application or digital world application, I guess. But that kind of has some staying power. So you can make a case like, okay, Ethereum has a purpose. Maybe it's undervalued relative to what it is in 15 years or so.
Right.
But overvalued now because it's hard to really say why is this worth $2,000 versus $50. Probably, like, that you can make a case either way.
Right, right. And if we talk about like experts are saying that buy those things which are banned in China.
Yeah, I heard about that recently. They just banned like all cryptocurrencies, right? Or something like that.
Yeah, they have banned everything like mining to trading to investing, everything. Everything is banned in China, and that is why people are saying that if China is banning, then there must be some really interesting thing in crypto, and that is why everyone should focus on investing in crypto because China is banning.
Yeah, I mean, I could see, I guess, a case for that. China's interesting, man. They got some unique problems in the way they handle things. Like, I don't know how much you've heard about over the last couple of years, like their bans on video games and stuff. Like they seem to ban a lot of interesting
Yeah,
things. I mean, I don't want to get like too political here, but like the like child policy, I think I
right.
don't know a lot
Yes.
about it. So
No, actually, kids are not allowed to play more than X hours or something like that.
yeah, I mean, they have such crazy policies. So like the fact that they're banning crypto, I feel like that might not necessarily imply anything about the future of the currency. They could change that in the future
Hmm.
pretty easily, and they seem to be pretty strict about things to begin with. So I don't know.
All right. So my final question is regarding China's Evergrande crisis. Have you heard about it?
I have. It's definitely sent some ripples around the market, hasn't it?
Yes, exactly.
Um, so I mean, I don't and it's funny because it's like, again, it's China. They're pretty restrictive on what kind of information you can divulge from a situation. And so my understanding from it was just like what I've read in like CNN news or NBC
Yes.
or all that stuff. It's just kind of whatever the news reports, and I don't see that. That sounds like a huge concern for China specifically, and I guess whoever the offshore international debtors are for Evergrande,
Hmm.
who knows how much of U.S. exposure or India bank exposure has to that. But I think that's a bigger issue for China, and maybe it'll have some residual impacts on other economies. But yeah, I don't see that causing any major crash in the world. Like I've seen a lot of, I think just the financial media's been trying to really compare it to the Lehman Brothers collapse,
Yeah, exactly.
and maybe it is for like that country, but I don't know. I'm more confident, at least in our, which seems crazy to say, our financial system than it was back in like 2008. They've had a lot stricter capital requirements
Hmm.
and cushions added since then. So at least from the US's perspective, I wouldn't see any sort of crash coming from the financial system as of right now. I mean, like of course, people always talk about debt bubbles and stuff, but
So
I'm
Fed is doing the right thing according to you at the moment.
I don't envy their jobs, that's for sure. And I'm sure I'm not going to necessarily pick a side on whether they should uh, keep raising rates or keep rates low or continue raising them as they sort of plan right now, or how inflation's going. Like
Right.
I don't envy that job at all. So it's I mean, our economy is doing strong from my read of things. Consumer confidence is kind of recovering.
Yes.
So it's okay in my book. Like
All
I'm
right.
not going
All
to
right.
nitpick the activities.
So, pardon me, but I want to ask one more question. Uh,
Yeah, go for it.
for, to whom do you support, Trump or Biden?
Oh man, I'm not a political person, honestly. I I
But
voted for
for
Trump.
business, as a business, if we talk about business perspective,
Oh,
uh,
business.
yeah, uh,
Hmm.
who is better, like Biden or Trump?
I haven't really delved into Biden's policies as much, but I know it's hard. Like, if there's one thing to give Trump credit for, it was that corporate tax rates were super low, which technically gets passed on to the shareholder. And if you're a
Mhm.
stock investor, that's you at the end of the road. So that, I mean, he was there while stocks were doing quite well, and his his tax policies would certainly help with that. I don't know. I haven't read too much into what Biden's plan is. I think those rates are supposed to be rising. And that might have even been part of Trump's plan. I can't quite remember. But I mean, traditionally, like Republicans are better for, I think, corporate businesses, but I don't know. I'm not political, so that's not my area of expertise.
All right. No issues. So thanks. It's really great to have you on the show, Carter. I've learned a lot. We had a great discussion regarding stock market investing and all that stuff. And I hope in the future too, we will have the same kind of discussion too.
Yeah, absolutely. No, I really appreciate you having me here. It's always fun to talk about stock market and investing, finance. I could rant about that for, and I'm sure I've already done plenty of that, but I could rant for another couple hours about it. So thank you for having me on here. I'd be glad to come back.
Yeah, I really appreciate.